Good morning, students. I trust that you are all well and you're in the right frame of mind for class this morning. Welcome. Now let's get started. We are continuing the topic accounts of corporations, company accounts, and we're going to be looking today at preference shares and ordinary shares and how it is they are calculated and recorded in the books of accounts. So, the objectives for today's lesson. By the end of this lesson, students should be able to calculate the amount of money to be gained from the issue of ordinary shares at a premium, calculate the preference shares to be recorded in the books of accounts, show how the amount received from the issue of shares are recorded in the journal, and state where in the balance sheet the amount for shares issued and premium are recorded. Students will also explain where in the balance sheet the amount for shares and premium are recorded and why. Now, just to do a little recap, we have started this topic before. What is ordinary shares? Can you recall? Sure. Ordinary shares give members voting rights within a company. A company can choose to issue less than the number of shares they are allowed to issue. The total number of shares a company is allowed to issue is called the authorized share. Do you remember? Oh yes. The total number of shares issued is therefore called the issued shares. Now, students, shares may be issued at face value, which is also known as par value, nominal value, or above face value, which is also known as above par. A share issued above par value is known as a premium. What is it called? Yes, a premium. Now, an example. A company is allowed to issue 40,000 shares at $2 each. The company decides to issue 30,000 shares at $2.50. You are therefore required to calculate the amount of money the company should receive as share capital and premium. Now, students, before we start our calculation, there are certain rules that must be laid down in providing the solution. First, we need to separate the authorized from the issued. So the company is allowed to issue 40,000. So the authorized share is 40,000. However, of the 40,000, they issued 30,000. Therefore, the issued shares represents 30,000. Now, what is the value of the authorized share? $2. And the premium value is 50 cents. That is the excess at which the par value was issued. The issued share capital, therefore, would be the 30,000 which was actually issued multiplied by the par value, which is $2. And that gives you an amount of 60,000. What will be the premium? The premium, remember, it is the excess value. Yes, the excess value, the above par value. So how do we calculate the premium? The premium would have been the issued share, which is 30,000, multiplied by the excess value, which is 50 cents. And that gives you $15,000. Another type of share is preference shares. You can recall preference shares carry a fixed rate of dividend and is paid before the ordinary dividend. A company can also issue preference shares to boost its capital. Yes, they might need additional, so they will offer or issue preference shares. Now, an example. So that same company previously, they're allowed to issue 20,000 8% preference shares at $2. However, the company issued only 15,000. So you are now required to calculate how much preference shares the company should receive. Again, we need to separate. So the authorized preference shares, we are breaking them down into the different values and the different types. So the authorized preference shares amounts to 20,000. What is the authorized value? Which is the face value? Which is the nominal value? $2. Yes. And the 8% that is placed after the 20,000, it represents the dividends that will be paid out to shareholders. Now, the issued preference share was only 15,000, so the company sold 15,000 of the 20,000 that they are allowed to issue. So how much should be collected? 15,000 issued amount multiplied by the face value of $2, and that gives you 30,000. So this company, what would be the total amount of money to be recorded? Prior, the ordinary share capital amounts to 60,000. The preference share capital is 30,000. And there's a premium of 30,000. So the amount of money to be recorded in the company's bank account, you will add all of these figures and you get $120,000. So how do we journalize this in the books of accounts? Once you issue a share, that you are expected to receive money. And once you are receiving money, it means your bank account is going to increase. So yes, the money you receive is debited to the bank account. Now, this total amount that you would have banked, you're going to now show how it is that you actually earn this amount. So we are going to divide them. The preference shares amounted to 30,000 and this must be credited. The ordinary shares amounts to 60,000 and the share premium 30,000. So students, the preference share capital, ordinary share capital, and share premium all carry a credit balance. And of course, in our journal, we do have what is called or what is known as our notes, right? And the notes is that all of this recording represents the issue of ordinary and preference shares at a premium. In other words, this is also known as the narration. So in the balance sheet, students, all the share capital, issued share capital, and reserves, as well as retained earnings, they are recorded in the equity section of the balance sheet. The equity section of the balance sheet. So the share capital and the reserves, they are placed under capital and the reserves. Now, students, I hope you would have learned. You are now going to go on to the discussion and the practice to see how much of this you would have learned. He who fails to prepare, prepares to fail. If you try at first and you do not succeed, try again. Only you can defeat yourself. I know that you can do it.